title of the video, I'm sure you can already guess what the topic is going to be about. We're talking about Citadel, Securities, and some of the latest news from out there. This is coming from over here on the Financial Times. Ken Griffin's Citadel Securities sells 1.2 billion stake to Sequoia and Paradigm. Coming down here, we can see deal values a trading firm at 22 billion and paves the way for initial public offering. Come down even lower, we can read about this one. We can see hedge fund billionaire Ken Griffin has sold 1.2 billion stake in Citadel Securities to the capitalists shown below, paving the way for an internal public offering of one of the world's biggest market makers. The deal, which values the trading firm at 22 billion roughly, is a rare foray into the financial sector for Sequoia and the Silicon Valley Group, best known for its early bets on tech companies such as Apple and Google. Come down even lower, we can see it is the first outside investment Citadel Securities has taken since it was founded back in 2001 as a separate entity to Ken Griffin's 43 billion hedge fund Citadel. So Citadel and Citadel Securities not the same thing, and that is the first thing that gets me thinking. It speaks about what is going on at Citadel and why are they taking this 1 billion from the firms listed above. And this really gets interesting because to me and you, of course, 1 billion is a massive amount of money, of course it is, but to a guy who's got about 20 billion in net worth and basically two hedge funds, or at least two companies valued at 22 billion and 43 billion, why can he not just make that money, move it over from this one to that one, or vice versa? That should be allowed, so why is he not doing that? Why does it benefit Citadel, and what happens? Well, let's read on and speak about this one even more. One of the biggest beneficiaries from the move to high-speed trading, Citadel Securities works between buyers and sellers, between different stocks, bonds, and derivatives. It has grown to be the biggest market maker for the US in the last few years, handling about 27% of all US entities or equities trading by stealing market share from bulge bracket banks. Down a bit lower, we say they plan to use the investment to expand more aggressively internationally. Now, this is where things do get interesting, as I have said. Why do they need only 1 billion to expand? If this is a guy who, like you said, owns two different businesses, and the other one is valued at double the valuation of this one, it doesn't make sense that he's going to try bring that money from an external source, because of course that does bring in an extra element of risk. That is just the way that I see it. Now, tying this back into AMC, it is speculated in the community that Citadel Securities is one of the funds short on AMC. It's speculated that they are also one of the funds which are losing money on these shorts, and also they are one of the funds which are potentially illegally shorting this one. Now, that is all alleged, I must say that again, but if that is the case, it would mean that they are probably likely to want more money. Now, as I have said before, they should have just brought this money across, unless it's not free capital that they had, which is why I believe they brought in the extra funds from somewhere else. I think it shows that they are kind of wanting money quite quickly, perhaps to stay afloat, or perhaps just to keep shorting some of the stocks that they are on. But either way, I think, in my opinion at least, it does point to a hint of desperation coming from them, because they would have just moved the money across, in my opinion. I think that would have been the more logical move, because why would they pick now when they've been caught out on AMC and GME? Why would they pick this particular time to go in and obviously start getting investments from external sources? Doesn't really make much sense, and it is strangely coincidental that this is going on all at the same time, like I said, that we're finding out about all of these things in the economy which are leading to a potential crash in the future. We're finding out about all this news that certain funds have lost by shorting stocks. And once more, tying that back into the investment, what do you have to say about that? Now, I'm not going to give too many of my opinions because I think they are already apparent, but I do want to hear what you have to say in the comments, so do tell me what your thoughts are. So thank you for watching through till the end, but let me tell you about our Discord. So on your screen, you'll be seeing the N2S Finance Discord. Obviously, it is split into multiple sections. Basically, at the top, we have updates from me and all that kind of good stuff. If you scroll down a bit further, we have the main sections where we focus on cryptos, SPACs, and other hot stocks, including penny stocks, even stable growth stocks as well. And we even have a special AMC GME chat. If you scroll down, you can see some research and DD from the community. We also have funny memes, and you can see actual contributions from members down here. And again, if you do join us, it is completely free, link is down below. But if you do want to become a Patreon, you will actually get a pink sticker which will be displayed on your name. So your name will come up in pink as mine comes up in red down here, and that will show that you are a Patreon. But other than that, guys, you can join completely for free down below. You do not have to pay anything if you do not want to. Thank you for watching, see you soon.